Good morning and welcome to the first edition of Business Morning on Channels Television. I'm Ini John Mekwa. Well, let's see some stories in the business space. This morning, we begin with the Organization of Petroleum Exporting Countries, OPEC, which has retained the global economic growth forecast for 2021 and 2022 at 5.6 and 4.2%, despite uncertainties over the Omicron COVID-19 variant. In a statement released, the oil cartel says while challenges to the economic recovery remain, the world economy continues to improve. And according to them, world oil demand growth in 2021 now stands at 5.7 million barrels per day, reflecting a slower than anticipated demand from China and India in the third quarter of 2021, while global oil demand is now estimated to reach 96.4 million barrels per day in 2021. Meanwhile, world total demand in 2022 is estimated to reach 100.6 million barrels per day. That's about 0.56 million barrels per day above 2019 levels. And a South African telecommunications giant, MTN Group, has said that the offering of 575 million shares of its Nigerian unit to retail investors on the domestic stock market is not a plan to exit the country. According to MTN Group President and Chief Executive Officer Ralph Mupita, the group still owns 65% in MTN Nigeria, and the offer aligns with the group's priority to create shared value and broaden the shareholder base of MTN to everyday Nigerians. Mr. Mupita further explains that MTN is set to intensify its commitment to Nigeria through engagement with government officials, as MTN Nigeria is important to the growth of the group. In Ebonyi State, the governor, Dave Umahi, has presented a total budget estimate of 145.4 billion naira for the 2022 financial year. The capital expenditure is pegged at 89.7 billion naira, which is about 61% of the budget, while 55.6 billion naira has been earmarked for recurrent expenditure. The governor, Governor Umahi, says the budget of latter rain is targeted at creating an enabling environment for economic development.
We have provided 5,000 employment opportunities to our civil servants at the state and local government levels in our 2022 budget, and we have also provided 2,000 youths and women, 200 youths and women per local government area to assess the 3 billion NSAS empowerment program from January 2022.
While in the oil space, prices rose today, recouping yesterday's losses as investors adjusted positions ahead of an OPEC Plus decision over supply policy. But gains were capped amid fears that the Omicron coronavirus variant will hurt fuel demand. Brent crude futures rose 85 cents to $69.72 a barrel after having eased 0.5% in the previous session. U.S. West Texas Intermediate crude futures gained 85 cents to $66.42 a barrel after a 0.9% yesterday. Global oil prices have lost more than $10 a barrel since last week, Thursday, when the news of Omicron shook investors. OPEC Plus will likely decide today whether to release more oil into the market as previously planned or restrained supply. Well, the new variant of COVID-19 Omicron has complicated that decision, with some observers speculating that OPEC Plus could pause those additions in January in an attempt to slow supply growth. Well, we'll talk more about that and, of course, other issues in the commodities market now, as we have joining us to share her views, Dumebi Yeke, an analyst with Financial Derivatives Company, coming to tell us what she thinks about. Hello, Dumebi. Good morning. Good to have you again.
Thank you
Second
so much.
time this week.
Thank you.
Yeah. So, but Omicron is on everybody's lips now.
Yes.
But
yes.
it does look like the concerns are easing. I mean, even yesterday, stocks are rebounding, oil prices rebounding. So it's like people are not so worried. I mean, we can't even compare it to when Delta
yes.
broke out. You know.
People are worried, but, you know, OPEC is having a meeting today. The decision is, going to be read out today. And analysts or the market is expecting that OPEC Plus would hold on their output. So based on that speculation, the market is somewhat, having some positive sentiment, but there are other factors that are still, of concern to the market, and that's because some countries are looking at renewing lockdowns. We're seeing travel bans here and there. Nigeria has, Canada recently put Nigeria on a travel ban, on the travel restrictions list. So with all of those things happening, there are still concerns of, oh my goodness, is this going to continue? Are we going? And this is the festive season, Christmas around the corner. People want to travel around. People want to travel back home. Some people want to travel, probably to the US or to Canada for Christmas, and with these travel bans, pouring in, it's still, raising some level of concern. I mean, if we look at the price of oil right now, it's not as high as what it was in October or early November. So that still tells you that there are still concerns in the market, still concerns about the virus. And I think another thing that is bringing some level of bringing down the heat, so to say, is because producers of the vaccine are saying, okay, they're already on their toes to look at whether people that are already vaccinated can actually, if the those that are already vaccinated, if the vaccine, can,
if they have immunity,
yes, if they have immunity, some level of immunity against this particular variant. So that as well. So with them coming out to say this, it's also reducing some level of concern in the market.
Okay, so a lot of analysts are forecasting that OPEC will not increase supply, that perhaps they will just stay on the 400,000 supply.
Yeah.
So what would that mean? What picture does that bring to mind?
So let's first look at the base case scenario here. The base case scenario, which is somewhat like a best case scenario, is that OPEC actually holds. They do not add this 400, and that's because, the US... Is there a
possibility of reducing?
No, not reducing. So no reducing, no increase. You just hold on it.
Is there a possibility
of reducing supply? There is that possibility, but it's highly unlikely.
Slim.
Yeah, it's highly unlikely, and that's because they have followers within this cartel like Nigeria. That if anything happens to their, supply, this will affect, yes, it will affect their income, so they most likely wouldn't do that. The break-even points for several countries within the cartel is very different. A country like Saudi Arabia or like Russia, that's now OPEC and its allies, like Russia, they break even when they make a lot of money, even when oil prices are $40 per barrel, $50 per barrel. So how much more a country like Nigeria that needs oil prices to be as high as $137 per barrel before they break even? So the cartel will most likely not reduce the quota. They most likely, the base case scenario is that they would actually hold, and that's because they are not only weighing the impact of the Omicron virus on demand, global oil demand, but also the action of US and other, top consuming countries. They are already releasing their strategic oil reserves into the market, and that is softening prices. So OPEC is not only faced with the Omicron variant, but also that decision. So if supply is increasing from this end, so they most likely might, hold. Yeah. So that's the base case scenario.
But we don't see them increasing.
No.
I mean, not with the threat of Omicron.
No, not with the threat of Omicron, because OPEC has always, since what happened in Q2 2020, they have remained conservative in oil supply. So they would rather, if anything, if they want to put supply out there, they would rather probably maintain the 400,000 barrels per day increase.
What does this mean for Nigeria? Because I don't even think we're still maximizing our quota anyway.
Yeah, so Nigeria is still far below the quota. OPEC recently increased Nigeria's quota for both November and December to 1.66 million barrels per day for November, and then 1.67 million barrels per day for December. But as of October, Nigeria is just producing about 1.35, and that's due to the issues of vandalism and, high operating costs for the oil extraction zone. So with issues surrounding Nigeria's oil supply, and oil production. What this means for Nigeria is that Nigeria could still struggle with revenue. You know, at the moment, Nigeria is more sensitive to changes in oil production than prices. So if oil production is largely affected, we would see a more significant impact on Nigeria's revenue. So we're looking at external reserves being hit. We're looking at foreign inflows reducing. You know, and all of this is going to have an impact on, you know, the naira. Looking at the impact, this is also going to have an impact on the foreign exchange market. So there's a lot of things that could happen for Nigeria in that regard.
Yeah, talking about the foreign exchange market, I mean,
yes.
One is that the airlines, the foreign airlines, and we now
yes.
have a problem because of our foreign exchange
yes.
supply.
Yes, yes.
So this is going to affect travels.
Of course. Of course.
Especially at a time
when it's going to be at its peak. So clearly, the first thing is that the issue of forex supply has been, you know, of concern over the years. And that's because once there is an issue with consistent forex supply at the official window, even for the IATA as well, you would see a ripple effect in import costs, you see a ripple effect in travel, you see a ripple effect in flight tickets. And if we look at the IATA rate over the past few months, it has depreciated sharply from about 415, or even as of last year, about 360 naira to dollar to about 444. So there's already that, you know, spike in the value of already a spike in the value of forex for this particular cause. How much more now that there is now shortages? So there's the impact on the repatriating of these funds. So already the IATA, with their presence in Nigeria, so some of the travel agencies and the IATA, they're finding it very difficult to repatriate their funds because of these dollar shortages. And then people that want to travel can't travel back to Nigeria. They can't even access flight tickets. So the travel agents have been told to stop that. So, and that's all because of forex shortages.
Contradictory, you know, because last week, the CBN governor was at the CIBN,
yes.
and one of the things he said is, now we have enough supply. And then we've also had some analysts come here to say that some people who hold dollar, actually artificial demand, they're creating artificial demand. So, I mean, what do you see going on in this space?
Okay, so here's the thing, right? The dollar supply has to be consistent. If you're increasing dollar supply today by 119%, if you're going to maintain that increase, then you will see the impact. But if today it increases by 119%, tomorrow it increases by 2%, and the next day there's almost no increase in dollar supply, people will, there's going to be speculative activity in the market. So people will say, oh, today there was increase, so I'm going to hold the dollar that I have now. Make the most of it now, because you really don't know what next is going to happen. So there's so much of uncertainty in the forex market as to whether supply is going to increase today or it's not going to increase today. So the bone of contention here is a consistent increase in supply. So if we're increasing by 100%, let's know that's going to continue every day. If we're increasing by 50%, so the business owners, the people traveling, the individual that wants to just change dollar to naira, everybody has an idea of what to expect in the market. And when all of this begins to happen, we'll see the ripple effect in the parallel market rates. We'll see the ripple effect in the IEFX. We'll see the ripple effect in the IATA rates as well. So, but the fact that people are going to keep speculating as to what to expect on supply and the entire forex market dynamic. So it just keeps people, they want to either hoard or, you know what, I'm just not even going to travel this year. Yes,
demand.
Exactly.
So I guess that goes back to the issue of supply.
Of course, yes.
Yes.
Right now, the issue with the forex market is just the supply. It's just the supply. There are other factors that are affecting the exchange rate, but right now, the most important aspect of it, or the crux of it, is the forex supply. If supply is not consistent, because if you're pumping supply into the market, people know what to expect. It's like an investor who wants to do business in a particular country. If you can say, okay, oh, if inflation is going this way, exchange rate is going this way, okay, I can make an investment decision. But when you're not sure what to place on macroeconomic indicators, it makes your decisions shaky. So for companies that, you know, need forex for the importation of their raw materials, at this point they're looking, okay, so today it's increased, tomorrow it didn't increase. Okay, you know what? Let's just buy as much as we can now, and then at that point in time you could see a sharp depreciation or a sharp, appreciation. Then the next minute you're seeing the naira is flat. So a lot of things will just keep happening, except if forex supply is consistent.
But have we felt the impact of the SDR, of the Euro bond? Have we felt the impact of those?
I mean, yeah, there was a time when the external reserves increased, from what it was for about 35, 36, now it's about 40, 41. It almost increased to 42. So we saw that, and we also saw the ripple effects in the forex market, But like I said, it has to be consistent. If we're having a shortfall of revenue and then we resort to external borrowing, and with these funds that we're getting, we're putting it in the external reserves. The external reserves looks buoyant. Investors, oh, they have external reserves. Oh, it's looking high, but the naira is suffering. Then there's still a big question. But if with all this money, with all this SDR and the Eurobond that we're getting, the external reserves is looking buoyant, but there is also a significant and consistent increase in forex supply to the official window, we would see things.
So I think at the bottom line, we still come back to the conversation of diversification and,
of course, to boost the government revenue,
because that's basically where it comes from.
The country's mainstay is still oil.
And oil production is not optimum. So we are still going down in that area.
I mean, right now, Nigeria's export earnings oil still accounts for about 70%, and for the external reserves, about 90% is gotten from oil revenues, and we make more money when we produce more.
So we hope to produce more. So do you think that this proposed stopping of the subsidy will have any effect? At least we won't have to be paying. That is if it is implemented by June, as promised.
Yes. So the thing is, in terms of revenue, removal of the fuel subsidy is supposed to free up cash for the government. And the big question is now what the government will use this money for. Because we still import refined petroleum products. So we produce the raw material, we sell it, but then we import the refined petroleum products. So that's why we see it's being subsidized, because by the time you put the dollar impact, by the time you put the global price of oil in the market, and then you're getting the refined product, the refined product is obviously going to be more expensive than you just selling the raw material. So with all of that, with that happening, and then the fact that we're now removing fuel subsidy, first of all, it's going to fully deregulate the downstream petroleum sector, making it an incentive for investment. If investment increases, it's a good sign for increased production. And then not only that, we're looking at Dangote refinery resuming operations as well by 2022. Defunct refineries as well, they're being rehabilitated. And refined petroleum products, the expectation is that refined petroleum products will increase. So meaning that, number one, the government has more money because you're not paying subsidies anymore. And the supply of refined petroleum products within the domestic economy is expected to increase. So meaning that demand should be met.
Boost economic activities anyway.
Yes, within that sector.
Exactly.
Within that sector. So in the medium term, we're looking at, we remove subsidies. Yes, the price of petrol is going to increase. People are going to feel the brunt, but the majority of people that make use of fuel are not the masses. They will feel the effect in transport fares, but it's not going to be as much as the person that actually owns a generator in the house that is buying fuel, or the person driving a car that is buying fuel. So for the government, it's going to definitely free up cash for them. The expectation is that they would use it for more capital, projects that will, in turn,
affect economic
development, and boost
more of the masses will feel the impact. Well, we do hope, but I think the government still has a lot of work to do to convince labor and some other unions before they can get.
So there is that dynamics as well, because the conversation will always come up. How are you going to mitigate the impact of this removal of fuel subsidy on people? And that's where the conversation around the 5,000 naira stipend.
Buying a liter of petrol for about 300, 400 naira, Anyway, but just before we let you go, what's going on in the commodities space? What else is going on there?
Prices are still high. We're in the festive season, which is normal, but weak consumer demand is still very much a factor that they're considering. Consumer disposable income is really down, but commodity prices are still going to remain elevated, especially during the festive season. So that's what we're likely going to continue to see in the commodities market space.
All right, thank you so much, Dumebi, for sharing your thoughts with us this morning.
Thank you.
Enjoy the rest of your day.
Thank you so much. You too.
All right. So after the break, excerpts of the speech of the Governor of Central Bank at the 56th Chartered Institute of Bankers of Nigeria is still generating a whole lot of conversation. Find out which parts we are talking about next. This is Business Morning on Channels Television. welcome back. Well, the plan to establish an international financial center at the Atlantic City by the second quarter of next year with intended benefits that include serving investors who seek to invest in critical sectors of the economy is attractive. But how can this proposed international financial center be maximally utilized for its full effect on the economy? We have the Managing Director, Chief Executive Officer of Timeline Consults Limited, Mr. Shuaibu Idris, joining us now to talk about this and a whole lot more. Good morning, Mr. Shuaibu. Good morning. Thank you so much for joining us.
Thank you very much, Inia. Good morning, viewers. Thanks for having me.
So I know you've heard about the proposed International Financial Center, which is supposed to serve as a hub to attract domestic and external capital. Now, from your perspective, how do you see this working? What do you see? Paint a picture for us.
Well, I'm sorry, let me start by correcting you. It is not supposed to serve as a mechanism to attract capital. The proposed International Financial Center in Lagos is supposed to be a melting point where ideas, issues as well as bonds and other, products that we trade in the market are going to be traded. The idea being bandied by the central bank is, if you may like, is basically to codify and to further strengthen what we already have. Lagos, as at today, is a financial center, whether we like it or not. If you start by defining what is a financial center basically is a community, a society where financial products are being bought and sold. And in a narrow-minded way is a center where products are being traded. Today, we have African Finance Corporation residing in Lagos, Nigeria. African countries, companies from quite a number of African countries are coming here to get, financial instrument being extended to them. Isn't that a center? So Lagos technically is already a center. What the central bank is trying to do is possibly to further espouse it. And I believe sincerely that it is a step in the right direction. We have the capacity, we have the technology, we have the people. However, there are still a number of issues that needs to be, looked at carefully before we achieve, the intended goals of the central bank.
Exactly, because, like you have mentioned, Lagos is the commercial capital of the country. Yes. We have a lot of centers. We have a lot of institutions. We have a lot of buildings, where you have financial institutions, financial transactions, commercial activities, going on. So one would wonder, is this just going to be a building that is standing on its own? What's going to be different about this? Because you'll still be working with the Nigerian system and still face the challenges, that exist in the country's commercial and economic space. So,
Well, it's, like I said, it's not just going to be a building. Lagos has been the melting pot of the African economy, whether we like it or not. Even before Nigeria became #1 in terms of the size of our economy, there is a new city being built in Lagos called Atlantic City. Yes. And there is a bit of a traffic of, if you like, the high net worth individuals, the mega rich, and the corporations establishing offices there. Only on Saturday, Sunday, I had a guest from the north. The person came and we went around Atlantic City with a view to looking at opportunities where to, to buy, properties. So it is just going to be a hub, a market where professionals will go in, trade in financial instrument. And I believe the central bank is looking at the situation of Casablanca today in Morocco, which is the best African financial center as at today. So the central bank is looking at, let's benchmark Casablanca. Let's be sure that we can even do better than Casablanca. Like you did say, Ini, we have quite a number of challenges. Insecurity is an issue. Our institutions that will checkmate, quote unquote, rascality in trading are still not as strong as they should be. Our currency is somewhere around number 15, 20 in terms of its strength in the financial system. It's not convertible. Even within the West African sub-region, we still have, that challenge. But I think, notwithstanding these challenges, I believe the fact that the central bank could dream this, then it can be done.
Shouldn't we be thinking of solving these problems? Because if not, then we'll still have a financial center, but may not be as impactful as we intended it to be, because these challenges will still curb the growth and the people, especially the international. We are talking about, for instance, in the aviation sector, because of repatriation of funds, foreign airlines may not be selling tickets to Nigeria. So these are challenges that it's not about, fine, the attractiveness of the idea, but in reality, how are we going to maximize this?
No, Ini, I beg to disagree. You see, a farmer will ordinarily, in the dry season, begin to prefer his or her farm ahead of the rainy season. The fact that we have these challenges, it does not necessarily mean we should just wait until we address these challenges. These challenges are part of life, and they will continue to be with us. Insecurity 15, 20 years ago, the level of insecurity that we have today isn't there. Are we saying that tomorrow, day after, we will not solve this? Certainly no. For want of a better example, the city of New York, the best and the first international financial center, have had these issues that Nigeria has today. And yet, the financial center business is still there. If there are issues that we need to possibly immediately address, maybe fundamentally 2 or 3, the issue of the product to be traded. We're still only trading shares, stocks. We need to have options and other exotic financial instrument. We need to have a commodity exchange where, for example, we would love to see our cocoa, our sesame seed, our cashew nuts, our crude oil being traded in a market that is domiciled in Nigeria. Yes, Naira may not necessarily be convertible soon, but the fact that Nigeria is a signatory in the AFCT, that is African Continental Free Trade Agreement, we are on a threshold of possibly, getting into a free trade zone in Africa, and possibly to even have a single currency, first within the ECOWAS zone, then to the continental African, as an entire community. So these are, stages that we will follow, and I believe getting the International Financial Center in place is a step in the right direction.
You mentioned the issue of a single currency, of maximizing the markets around us and all that, and AFCFTA simply comes to mind. What are we doing with that?
Well,
because that's another example of having a beautiful idea, having it all set out, but when it comes to let's implement it, let's do it, and then we just have the name.
Well, like I did say, it is always better to have to dream it, and maybe not immediately, we may not be able to actualize it, but even without the establishment of the African Continental Free Trade Agreement, the ECOWAS sub-region, the major benefactor as far as ECOWAS sub-region is concerned is Nigeria. If you go to Cotonou, just drive across the Badagry border, you go to Cotonou, what do you buy in the markets? You go to Ghana, you go to as far as Freetown, or even Liberia, Monrovia, you will see quite significantly product from Nigeria. Glory be to God. Today we have a Dangote, we have other companies that are producing products that are right now more or less replicate in most of these African countries. I believe whether there is a formal implementation of the African Continental Free Trade Agreement or not, there is that symbiotic relationship among us Africans.
The symbiotic relationship that also causes smuggling into
Well,
Nigeria.
now you are bringing another, if you like.
I'm just bringing that up to say that if we have these policies and we follow them up, with the right institution, like you noted even at the beginning of our conversation, then it will curb some of these challenges, and then we'll be able to maximize the benefits, which these policies and ideas are supposed to bring to the country.
Yes, the issues are, if we implement the African Continental Free Trade Agreement to the letter, there wouldn't be smuggling anymore.
Exactly.
Because it's a free trade zone.
Okay.
The major challenge of our inability to implement African Continental Free Trade Agreement to the letter and like yesterday, to my mind, are two: logistics and supply chain, the absence of road network, rail network that connects African countries so that goods and services can move freely, and the issue of currency compatibility.
Yeah.
Once these two issues are sorted out, I believe we will be able to have a fairly decent implementation of the African Continental Free Trade.
Okay, all right. Yes. Thank you so much, Mr. Shoaib Idris, the Managing Director, Chief Executive Officer of Timeline Consult Limited, for sharing your thoughts with us. And we do hope that with time, these challenges that we talk about would have been dealt with, and then we can maximize both the AFCFTA and the international financial
Thank you very much for having me.
All right.
Thank you.
So, still talking about production and productivity, we have FMDQ Private Market is interested in building more entrepreneurs, and so they say a partnership with Oxford Foundry of the University of Oxford is one step that they take. Well, we have joining us to discuss what they are doing with Oxford and how they hope to build entrepreneurship. We have the Chief Operating Officer of FMDQ Group, Ms. Kodi Ugoji, this morning. Good to speak with you, Ms. Ugoji. Thank you so much for joining us.
Thank you for having me. Good morning.
Yeah, so do tell us, how do you intend to accelerate the growth in the startup ecosystem?
Okay, thank you for that. In July, Channels TV was one of those to break the news of the partnership between FMDQ Group through FMDQ Private Markets Limited and Oxford Foundry of the University of Oxford. We were very excited about this at the time because of what it brings, of course, to Nigeria. Firstly, the partnership with Oxford exposes everyone who is going to participate in this to the networks really of Oxford University through Oxford Foundry. What do we plan to do with this partnership? This partnership has 3 bespoke programs under it. This partnership will see 3 bespoke programs, all launched within the next couple of months. In fact, 2 have launched yesterday. So I'll speak to the 3 quickly. The first is the Young Entrepreneurs Leadership Program, short form YELP. And that program is geared at individuals aged between 21 and 35 years. And it's just saying we're just calling out to young Nigerians based in Nigeria, because we want to develop Nigeria, to come and showcase what it is that they have. And out of that, this selection process would see 20 young business leaders go through a program, an intense 4-month program that will run leveraging on Oxford University's networks, frameworks. They'll be exposed to business leaders. They'll be exposed to entrepreneurs. They will have master classes, which would help develop their leadership skills and their entrepreneurship skills, which will help them as they begin to develop and grow. And of course, we know what the impact of this. If we have more entrepreneurs successful in Nigeria, then we know that it would create jobs. It would, at the end of the day, help towards economic development. The second program, which also launched yesterday, is the Innovate Nigeria. And as the name implies, we're looking here for ventures, young venture companies or young ventures young startup companies, innovative startup companies that would come up with brilliant ideas. I mean, we know that we're not short of innovative ideas in Nigeria, and we want to harness this. So we're going to be looking to select 5 of these ventures to groom them again towards building and making these their ventures scalable. So we're looking at 5 Nigerians who have already maybe started some sort of business, small business, innovative ideas that will be geared towards technology, healthcare, green industries, agriculture, pretty much everything across the spectrum we're looking at. And we're going to take 5 of these ventures and groom them towards making their businesses scalable and, allowing them to harness all the opportunities available to them to grow into significant businesses that would impact that would impact the nation's economy in the medium to long term. So those 2 programs opened yesterday. We're taking applications for 2 months. The applications will close January 31, 2022. And we encourage all Nigerians to join, and I mean, all eligible Nigerians to take advantage of this, because the networks that they would be, exposed to, the learnings, the frameworks, the individuals, and all that they will be exposed to would be limitless. I mean, they're going to be leveraging both Nigeria's and the UK's angel investment communities. So it's a big deal for them. It's an opportunity to grow. It's a small start, but we know that increasingly this is something that we can, continue to develop as we go along. So we're calling on Nigerians to please partake of this, and we look forward to receiving applications, and we look forward to the program. The first program, which is the YELP, is a 4-month program. The second program, Innovate Nigeria, is a 2-week intensive program.
Okay, so how do they reach out to you? How do they access this program, and at what cost?
Okay, brilliant question. We're very pleased to say that it's at no cost to any of the participants. This is something that FMDQ Group, through its private market subsidiary, is doing to support growth and development in Nigeria. So at no cost to participants, how can they reach out to us? Yesterday, we published the call to application in 3 national dailies. All the information required is on our website, www.fmdqgroup.com/FMDQ Private Markets. You'll find the application forms, you'll find all the frequently asked questions, and all the details that are required to enable them apply for these bespoke programs.
All right, Ms. Cordy, thank you so much for, these freebies that you're giving to Nigerians, and I do know that a lot of innovative and creative Nigerians are waiting to make the most of it, and enjoy the rest of your day.
Thank you, you too.
So let's go to the markets now with Aniti Edet. Hello, Aniti.
Yeah, hello, Ini. Well, you weren't here. I wish you were here, because I said something yesterday. I said, when MTN Nigeria sneezes, the market catches cold, and it just happened yesterday.
So you're a market prophet now, Aniti.
Well, I wouldn't call myself a market prophet yet, but I hope I can be. All right, so let me take you through what happened in Wednesday's trading session yesterday. 409.56 billion naira, that's what this amount in percentage term translates to when you take a look at the value of the market's value, the value that was wiped off the market in yesterday's trading, no thanks to MTN Nigeria's 10% drop in share price on the day that the telecoms behemoth made the debut of its retail shares sale to investors. And then, of course, of the market, MTN actually has been listed within the last 2 years, precisely in 2019, and the share price closed at 119 naira. So, but this is what happened at the market yesterday. And as well, the market's all-share index has fallen below the 43,000 level, currently at 42,463.16 points. Now, we don't know what's going to happen, whether it's going to continue into a fourth trading session. So we've started the month of December in the red, 1.18%. That's so far how it is. But if you take a year to date, we're at 5.4%. Now, let's cross over to the sectoral performance. Mixed bag there. This one is almost flattish. Insurance sector up 0.77%, while the rest, the three others, were in the red. And of course, they added to that downturn, to that loss that we saw on the market. Quite a bloody day for the market there. But in terms of volume, was slightly higher, and then value and the deals. But it will interest you to know there's some news just coming in that Airtel Africa has announced the completion of the minority shareholding buyback of Airtel Africa Networks, or otherwise known as Airtel Nigeria. And that's this is further to the buyout announcement made on the 4th of October this year. And it means that Airtel Africa now holds 99.96% ownership over its largest subsidiary, Airtel Nigeria. Of course, the total consideration for the 8.22% minority shareholding acquired under the buyback is about 61 billion naira. That's equivalent to about $147 million using an exchange rate of 415 naira 7 kobo, to the dollar. So that's just what happened at the equities market. Now let's move over to the fixed income market. It's still rather quiet for the market there. Not much happened. There was OMO maturities payments made on 64.3 billion naira OMO maturities. And then, of course, there will be a mild OMO auction. But this is how the market was for the Treasury bills market as well as the central bank's special bills. But that's all for the markets now. We will be looking out for how Thursday's trading session ends for all of these markets today.
All right, Anita, thank you so much. Talking about the equities market, I do hope it's not going to be a red Christmas, honestly.
You never can tell. You never can tell. But of course, it could have a mind of its own.
Christmas. Thank you so much, Anita. Well, we'll take a break now. When we come back, we'll head to London with Juliana. Do stay with us. You're welcome back. You're still watching Business Morning on Channels Television. We're heading to the UK now. Globally, actually, the events industry have been hoping for a big Christmas parties, to help them recoup the lost earnings from last year. But it seems that hope is being dashed by Omicron. In the UK, corporates are talking about small or no Christmas party at all. Well, we have Juliana now joining us from our London studios to give us the details. Hello, Juliana. Good morning. So it seems more workplaces are talking about either no Christmas parties or small Christmas parties. But from the feelers you're getting, how is Christmas looking like?
Yeah, it's an interesting dilemma that firms are facing at the moment. In fact, the whole talk of Christmas parties has turned into a huge political storm here in the UK. There are some pictures that have emerged from December 2020 at Downing Street, showing several ministers enjoying Christmas parties at a time where there was a ban on large gatherings. So that is a huge issue, another huge issue that the Prime Minister, Boris Johnson, has to handle. And according to the Prime Minister, Christmas parties should be on. He's very much sticking to the plans that he set out on Saturday, and then again on Tuesday, and again in the House of Commons yesterday, that wearing face masks, washing your hands regularly is enough, hopefully, to tackle the new spread of this new variant, as well as, of course, taking your vaccine. But there have been a few surveys, one that was reported in the BBC this morning, where according to 2,000 firms, over 52% of them will be cancelling their Christmas parties. Some of the big investment banks and personal banks like NatWest, Aviva, Deloitte, Goldman Sachs, they're used to putting on really big shindigs, and apparently that's not happening this year. However, Christmas parties still will be happening amongst those big firms, but in much smaller clusters of 50 to 60 rather than the hundreds that they would usually do in Park Lane or somewhere in Mayfair. So at the moment, it's thumbs up that Christmas parties are on, and that's government guidelines.
I guess there can also be hybrid Christmas parties at the end of the day. Well, the Climate Change Committee is talking about UK contributing to a high rise of temperature. But the UK has, in recent times, talked a whole lot about meeting the emissions target. So what's prompting the CCC's comment?
Well, yeah, I think, this story isn't really saying anything that we don't already know. I think if you go back to COP26 a couple of weeks ago in Glasgow, I think the tears at the end from Alok Sharma, the designated president of the UN Climate Summit, summed it up really, that these countries are not doing enough, and Britain is one of them. Of course, there have been big pledges to try and limit or alleviate some of the warming that's currently undergoing. We're well on our way to hitting 2 degrees centigrade, which is, almost a point of no return. And I think the Climate Change Committee are just really highlighting the fact that even though Britain and Boris Johnson's Conservative government want to wave the flag and consider themselves the leader in reversing the climate emergency, they're not, and they need to do much more. How far can Britain go? That's a big objective, because of course lots of these climate change ambitions and commitments will have economic consequences for now, for the better future. And I think those are really some of the stark warnings that the climate change report this morning was trying to identify.
All right, Juliana, thank you so much. And we'll talk to you later during Business Incorporated at 1:30.
Thanks, Annie.
So let's head to the crypto space now, and Laddie Williams has updates.
Yeah, great to have you back on the Business Morning
Good to be back, Laddie. Thank you.
Anyway, the crypto market is not looking so strong this week. All the action seems to be happening, in the metaverse segment of the market, but we see Bitcoin struggling to keep up with the resistance there of about $60,000. Market cap, we have $2.59 trillion. It's down 1%. 24-hour volume, it's down about 5% this morning for the total crypto market. Bitcoin dominance inched up from the 40% range yesterday. It's now at 41.18. Price of Bitcoin this morning, it is struggling to stay above this 56K range. Right now, it's down 0.49% this morning. $37.21 billion traded in Bitcoin. So we see Bitcoin struggling. The bulls are trying to get above that 60K range again. Well, Christmas is looking quite a little limbo for the crypto market at this point. Price of Ethereum now, 4,005. It did get to about 4,700. It's down 3.56%. Volume traded, $26.71 billion in Ethereum. Looking at the top also market cap there, we see BNB still sitting above the $600 range. The $622 is down 1.23%. And the only gainer we see there in the top alt, we see Solana holding up strong, $223. XRP back below the $1 range. Did get above $1 yesterday, has been knocked down. It's down 3.11% this morning. Top 5 gainers, see Matic there, $2.13. It's up 12%. Matic has had an incredible run this year. It was trading below the $1 mark earlier this year. But now we're seeing Matic there looking bullish this morning with OKB there for the exchange that's up 9%, Waves $23. Let's bring in Bukola Umaru now, a digital market analyst. Great to have you, Bukola.
Hello, good morning.
Good morning. Yeah. So we've seen the Omicron variant affect major markets in the world, plus the crypto market. Plunging Bitcoin down about 10% last Friday. How do you see trader psychology this time?
Oh, yeah, the fundamentals about there and the COVID variant affected the market because the news that comes out affects the psychology. People get scared.
Hello, Bukola. I can't really hear you well. Can you speak up?
Oh, can you
Okay, continue.
Hello, can you hear me now?
Okay, better, much better.
Oh, okay. So as I was saying, so it affects the psychology of the traders and investors. So they get scared and they're thinking they have to pull out their money from the markets and let the market settle off and take off profit, then come back when everything settles. So this really gets to affect them and they're like, okay, I need to get the money off the markets because of this news, which might have a bad effect on the market.
Right, but how do you see Bitcoin price playing out, for the rest of December?
I think it's a bit unstable. I mean, it started 1st of December. It looked bullish, but for today, it's been going down. So it's really unstable right now. You can't really tell. So it's a battle between the bears and the bulls in the market.
What key levels are you watching for Bitcoin's price?
Oh, I'm watching right now. It's a bit bearish for me while I was analyzing the market. I mean, the technical analysis. I've been looking at the 54,000, even though some people are wondering why would it go to 54? We're supposed to go to the moon. We're supposed to go to $100,000. But right now, I'm looking at the $54,000 level, the key levels for the resistance, and see how it plays out. If people still want to sell or probably still hold on to the market. I mean, with the adoption of cryptocurrencies, I think in the long run, Bitcoin is still going to do well. But right now, it's still unstable.
Right. I guess the road to the moon is not a straight one. All right, Bukola, thank you so much.
Exactly. Yeah, you're welcome.
All right, Ini, there you have it. Top losers there. We see STX, they're down 14%. IMX is $7, down 11%. We're seeing double-digit losses with BATS, their basic attention token, down 8.63%. So it's quite a mixed market right now, Ini.
Yeah, so Ladi, would it be safe to say that metaverse happened to crypto?
Yeah, metaverse is the segment to watch right now. We're having a play to earn. We're seeing virtual lands. Now we have where to earn.
The virtual land is the most interesting one.
Very interesting, virtual real estate.
All right, Ladi, thank you so much. And thank you so much for being a part of today's show. Do remember that at 1:30, Business Incorporated will be coming to you with more updates from the world of business. I'm Ini John Mekwa.